The point I'm trying to make is that as bond yields rise, value stocks are preferred over growth stocks. Growth stocks are high PE stocks. Look at the NASDAQ. The NASDAQ normally has the pricey FANG stocks. They rose by 81% year on year if you look March over March. But if you look from Jan to today, Jan 1st to today, they've risen by only 2%. Whereas the value stocks, which is largely the Russell 2000, the mid-cap stocks in the US, year to date, they have risen from Jan 1st by 14.3%. This coincides with the rise in bond yields. Like I told you, the NASDAQ comprises the rich PE, high-priced stocks. And when the Russell 2000 outperforms the NASDAQ, you can come to the conclusion that value is outperforming the growth stocks. Okay, now this is happening largely because of higher bond yields. When bond yields rise, there is selling in high-priced stocks. And I'll tell you why. That is because their earnings yield now starts to look even less than bond yield. What do we mean by earnings yield? This is how you understand earnings yield is the ulta of PE. Now, let's look at the table. A PE of 20 times for an index or a share implies an earnings yield of earnings 20 by 100, that is 5% earnings yield. If the PE is 25, then earnings yield falls again to 4. If PE is 50, earnings yield falls even more to 2%. Now, let's compare it to the bond yield. The bond yields, if they go on rising to above 2%, then at one point they will look more attractive than the earnings yield and money will go towards the bonds. That is what has happened now. Jan 1st, the bond yield, 10-year bond yield was at 0.9 and by March it had risen to 1.6. At this level, the difference between bond yield and earnings yield is less. If the bond yields rise to 2%, for instance, then the earnings yield starts looking less attractive and money migrates. But it is the converse for value stocks. High yields reflect that there is going to be generalized economic growth and therefore the value stocks start looking attractive because they benefit when there is a generalized economic recovery.